The purchase consideration agreed 6,61,500 and 3,15,000 for A Limited and B Limited respectively. Realization accounted to equity shareholder if it's a profit. If this is a loss, no, equity shareholder accounted to realization account. There is a capital reserve will come 23,500 because assets are more and liabilities are less. Difference will come to credit side. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. Today, in this session, I am going to hand Advanced Corporate Accounting 4th Semester Unit 2, Session 2 in favor of mergers and acquisition of company. In the last session, I already told what do you mean by merger, what do you mean by acquisition. Now, I am going to explain the second problem with the detail. What do you mean, how to do that merger and acquisition of the business. So, this is a problem of amalgamation of two companies. Amalgamation of two. When the two companies amalgamated, how it will be treated. I am going with the problem now. The following is the balance sheet of A Limited and B Limited as on 31st March. So the balance sheet of both the companies are given. Share capital, this is 5 lakh. General reserve 1,70,000. Profit and loss account 30,000. And debenture we have got 1 lakh. Then credit of 50,000. Employees provident fund 15,000. So this is a balance sheet given by of A Limited. Then assets. Building 1,50,000, machinery 5,50,000, stock 80,000, debtor 70,000, cash at bank 15,000. So that is the balance sheet of A Limited. Now the balance sheet of the B Limited, 30,000 equal shares of 10 each, 3 lakh. Then creditor is 40,000. Then machinery is 2,50,000. Current asset, stock 40,000. Debtor 45,000, cash at bank 5,000, totally it is 3,40,000. The two companies amalgamated on 1st April 2022 and formed a new company called C Limited, which takes over all assets and liabilities of both the company. The purchase consideration agreed 6,61,500 and 3,15,000 for A Limited and B Limited respectively. The purchase consideration is paid in fully paid equity shares of 10 each. The authorized capital of the C Limited is 2 lakh, equity share of 10 each, pass journal entry to close the books of A Limited and B Limited and prepare opening balance sheet of C Limited. I told you, no, first we have to prepare the realization account where all the assets and liabilities will be transferred. So there are two companies here. One is A Limited, one is B Limited. So both the companies taken over by C Limited. C Limited took over the assets and liabilities of A Limited, the assets and liabilities of B Limited. So they are going to pay some price. That price we call as purchase consideration. This is the amount paid by the new company called C Limited to A Limited and B Limited to take over the assets and liability. But only one word here. A Limited respectively, the purchase consideration, the company which takes over all the assets and both the company, the purchase consideration is agreed 6,61,500, 3,15,000. This is the amount payable. So first one, A pay how much? 6,61,500 paid to A Limited, 3,15,000 paid to B Limited. This is the amount payable by C Limited to A Limited. They take over all the assets and liabilities of A Limited and B Limited and pay the amount. They already agreed to pay how much? 6,61,500 to A, 3,51,50 into B in the form of shares. Agreed. So, who is going to pay? C Limited is going to pay A Limited and B Limited 6,61,000, 3,15,000. They take over all the assets and liability. So, they have to prepare an account called realization account. The general tendency of this realization account, no? I told you the last class, all the assets comes here. Here, all the liabilities. Then, new company, PC, purchase consideration. Commonly, all the assets and liabilities are taken for that new company pays. Whatever the difference comes here, if there is any difference on the debit side, to equity shareholders, this is profit. If the difference comes to credit side, equity shareholders, loss. The journal entry goes like this. Realization account data to asset account. All liabilities account data to realization account. Equity share, new company account data to realization account. Realization account data to equity shareholder, if it's a profit. If this is a loss, no, equity shareholder account data to realization account. This can be passed like this. First one. Realization account data to all the assets, to building, to machinery, to stock, to debtors, to bank. All assets of A Limited is transferred to realization account. Regarding the liabilities, debenture account data, creditors account data, employees provident fund account data to realization. All liability will be transferred. Then this is the purchase consideration. C Limited account data to realization. This is the purchase consideration payable by C Limited to A Limited. Then they paid in the form of share. Equity share in C Limited account data to C Limited. How much he paid? He paid 6,61,500 in the form of equity share. So that favorable to A Limited. Now in the same thing goes to B Limited. Realization account data to machinery account, to stock account, to debtors account, to bank. All the assets of B Limited is taken over by C Limited. Regarding the liability, creditor account data, RBD account data to realization. Here you have to take the debtor full value, RBD has been taken on the credit side. Then C Limited account data to realization account. This is the purchase consideration payable by C Limited to B Limited. Equity shares in C Limited account data to C Limited. 3,15,000 being purchase consideration in the form of equity share. Then realization account data to equity shareholder account. This is profit transfer to equity shareholders account. Then equity share capital account data to equity shareholders account. So the purchase consideration has been paid to the equity shareholder. Equity shareholders account data to equity share C Limited being payment made to equity shareholders. Then journal entry in the books of C Limited, that is the new company, business purchases account data to liquidator of A Limited to liquidator of B Limited. This is the purchase consideration payable to A, payable to B. Then we paid in the form of equity share. Liquidator of A limited account debtor 6,61,500. Liquid debtor of B limited account debtor 3,15,000. To equity share capital 9,76,500. They paid in the form of equity shares. They take over all the assets. We'll combine both the assets now. Building account debtor. If you see, you understand this word. So both the building will be combined together. Building account debtor, machinery account debtor, stock account debtor, bank account debtor, 2 RBD, 2 debenture, 2 creditor, 2 employees provident fund, 2 business purchase account. Whatever the difference comes between the debit side and credit side, that is called the capital reserve. If the difference comes to debit side, it is called the goodwill. They take over all the assets and liabilities. Whatever the difference comes, that will be considered as a capital reserve. We will move on to balance sheet now. Vertical column. Here, how to write? Equity and liability, share capital, 2 lakh equity share of 10 each, that is 20 lakh authorized capital, issued and paid up capital, totally whatever the purchase consideration total comes, they paid in the form of equity share. There is a capital reserve will come 23,500 because assets are more and liabilities are less. Difference will come to credit side. Then both the debentures have been, it becomes 1 lakh now. Creditor 90,000, employees provident fund 15,000. Regarding the asset, non-current asset, building 1,50,000, machinery 8 lakh, stock 1,20,000, debtor 1,20,000 minus RBD 5,000, it becomes 1,15,000. Cash at bank is 20,000. Totally it will tally for 12,05,000. Then, how you arrive this 23,500? We have working note. Equity share capital A limited, B limited as per the balance sheet is 8 lakh. The purchase consideration is 9,76,500. So there is a difference of 1,76,500. But general reserve of A limited and B limited, profit and loss account of A limited and B limited is 30,000. Totally it will come 2 lakh. So 2 lakh minus 1,76,000, there is a difference of 23,500, which can be kept as a capital reserve. This is equity share capital A and B 8 lakh. The purchase consideration is 9,76,500. So there is a difference of 1,76,000. General reserve of A limited and B limited is 1,70,000. Profit and loss account of A limited, B limited is 30,000. Totally 2 lakh. But there is a difference of 1,76,500. So there is an excess of 23,500, which is considered as a capital reserve. It will come on the liability side of the balance sheet, which have been shown here. So this is the amalgamation in the nature of merger. Both assets combined together. The new company take over the assets and liability. For that, they paid the purchase consideration, which have been paid in the form of equity share. So in the next session, we'll go to one more problem about this merger and acquisition in the favor net asset method only, taking over assets and liability. Once you understand, we can go to another method called amalgamation in the nature of merger. Till then, goodbye. Meet in the next session.